Hello and welcome to Live Wire Markets. My name is Chris Conway. In today's Fund in Focus, I'm sitting down with Whitefield Managing Director Angus Gluskie. He's here to talk to us about a new strategy, Whitefield Income. Angus, thanks so much for sitting down with Live Wire today.
A pleasure.
Whitefield has been listed for more than 100 years. Have you flown under the radar and what makes you different?
I think we're not the most widely known company, despite Whitefield Industrials being moderate in size. We aren't the largest one there. But we're certainly well known to our loyal investors, and I think there are 8,000 shareholders in Whitefield Industrials.
Whitefield Industrials, Angus, it was launched in 1923. 102 years later, you're about to launch a new equity income strategy called Whitefield Income. What can investors expect from that?
Whitefield Income, as its name suggests, runs with an equity income strategy, and to explain that, that means while we're invested in a portfolio of ASX 300 shares, the objectives are very much to generate return and distribute that return to investors as franked dividends. So it has that focus on income generation and dividends. Additionally, it's an actively managed strategy, which means that we're systematically investing across the universe of ASX 300 stocks with the objective of investing over the periods of time where return generation is most favourable across companies' income recognition and dividend payment periods. So explaining that a little bit more, it's worth considering that as companies earn income over, say, a typical 6-month period, it's not taken up consistently into share prices across the 6 months. Instead, what we find is income is typically recognised slowly in the 6 months, early on in the 6 months, but increasingly rapidly as dividends come into focus. And so our strategy is to invest over that most favourable period of income recognition and dividend payment and look to generate strength of return from that exercise.
Angus, just to follow up there, if I may, how many stocks do you need to make that process work?
Okay, well, diversity is tremendously important. So we would hold 70 to 100 stocks in the portfolio at all times, and that helps us control risk.
Angus, what type of investor would this strategy be suitable for?
Okay, well, we think there's two cohorts of investors who'd be interested in this strategy. So investors who are comfortable with an Australian shares exposure, but who are looking for regular monthly franked dividends. And so this vehicle intends to pay out its distribute return to investors as monthly franked dividends. And we'd expect to set the initial base dividend rate at roughly 8%. That's inclusive of franking credits, which equates to 5.6% net of franking credits. The second cohort of investors that would have an interest in this strategy, though, are people who are looking for just a differentiated way to generate return from Australian shares. And the strategy is quite differentiated. It's not a strategy about stock picking, as many other Australian share strategies are. It's very much about systematic processes and the systematic targeting of these return opportunities. In addition, it's differentiated because an investor ends up with a portfolio of shares implicitly through the fund that has quite a different exposure to what you'd find in a typical Australian share fund elsewhere. You know, typically Australian share funds are market cap weighted. The bigger stocks make up a big percentage. In this case, where we're investing in 70 to 100 stocks, they're much more evenly weighted.
Angus, you talked a little bit there about process. I just want to dive in on that if we can. The process uses a quantitative investment infrastructure. Big words to unpack. Yeah. Can you just share with us what that means in a practical sense?
In simple terms, it means we ingest a lot of information electronically and we look to make sense of it using mathematical measurements, which just assists in the processes of delivering performance consistently and with rigour. What it means for Whitefield Income is in our process here, we're looking to estimate and anticipate as companies earn income and as they pay dividends. So our system assists us in that process.
Angus, another follow-up if I may. Do you have to constantly monitor that system? I'm assuming things change, albeit perhaps slowly over time, but what does that look like?
Yeah, we certainly have a regular process of monitoring and enhancement, and it's more that occasionally additional pieces of data can be useful. If we believe they're useful to our measurements, we'll start to incorporate them into the process.
Angus, how often do you turn over the portfolio and how does it impact income?
Okay, so the portfolio is actively managed, and in fact, the strategy is about systematically rotating the portfolio to target those most optimal periods of time in each company's income recognition cycle. So holding periods are typically between 2 and 20 weeks. The average is around 11. It does mean turnover sits at around 400% per annum.
Right. Let's talk franking, Angus. How important is it? And perhaps why are you investing in companies that don't have franking?
Okay. Yeah, well, look, franking's obviously important. It provides a tax credit for ourselves and for investors when we pass that on. But interestingly, the areas of mispricing in the marketplace occur on both franked dividend payers as well as unfranked dividend payers. So that means we can invest across both and look to generate returns from both. In the case of the situation where we receive an unfranked dividend, though, we'll then pay tax on that, which means when we then distribute our income to investors, it tends to be franked.
Angus, the $1 million question, does the strategy outperform or underperform?
Okay, well, we have run this strategy in practice for just under 4 years in an unlisted fund.
Yep.
And look, the strategy's performed well and generated a moderate level of outperformance versus its benchmark over that time frame. So that's pleasing, but look, at the end of the day, it's an Australian shares exposure. We know Australian shares are volatile. They will have years where they generate quite strong returns and other years where it's softer. And I think investors should expect that this strategy will still have that. While the income has a propensity to be consistent, the overall total return, which includes those fluctuations in market values, will move with the Australian market.
Angus, what investment characteristics does the strategy have and what does it provide for investors?
Okay. There are some interesting and quite nice characteristics, we believe, that just flow from this type of strategy, which is focused on income generation. So one is because we're invested all the time in companies that are dividend paying, which means they're profitable, cash flow positive companies, the portfolio has a quality tilt, which in terms of knowing that what you're invested in is, relates back to profits and earnings, that's quite a comforting feeling for us as a company and hopefully for investors too. Another element is diversity, which we've mentioned, holding 70 to 100 stocks in a non-market capitalisation weighted basis means the risk is quite well spread. And the other attribute I think is important over time is that because the portfolio is continuously adjusting, it means we're orienting the holdings to the stocks and sectors in the Australian economy that are benefiting from the economic conditions of the time. It means, over time, it will go where income is coming from.
Angus, you've already talked about the fact that the strategy has been operating for 4 years now. Can you tell us a little bit more about the new listing?
It's the IPO, so the public offer is coming up very soon, and that will give public investors the opportunity to invest in this strategy.
Great. Angus, management are investors in Whitefield Industrials. Will it be the same scenario with the new Whitefield Income Fund?
Yeah, look, I think it's a really important thing that managers are closely aligned with shareholders. So we are big investors in Whitefield Industrials. We're also planning to be big investors here in Whitefield Income. And look, that's one of the reasons we look to create this strategy. We're big believers that it's got good merit.
Angus, last one. How can investors find out more about Whitefield Income?
So easiest place is our website, so whitefield.com.au.
Fantastic. Thank you so much for sitting down with Livewire today.
Yeah, a pleasure.
If you enjoyed that Fund in Focus as much as I did, make sure to give it a like. And don't forget to follow our YouTube channel because we're adding lots of great content every single week.